The second big news is that silver prices have crashed again. Bitcoin and silver have crashed so hard, there's no bottom in sight. Bitcoin is heading towards 60,000. Bitcoin went from 100,000 down to 60,000 and it's still falling. Silver dropped from over 120 to around 70 and it's still going down. Why? Why did silver rise late but fall first? And why such a sudden crash-like drop? Why? This is what I mean by the capital market. This is the capital market. All capital markets originate from casinos. All of them. What do I mean by all? All capital projects, whether it's Bitcoin, electronic currency, gold and silver, oil, the stock market, or bonds, everything comes from the casino. The casino is its root. But traditional casinos have four major limitations, which makes them worlds apart from the modern financial industry. It's like the difference between humans before using tools and humans after inventing tools, a world of difference. What are the four limitations of traditional casinos? The first limitation is the number of people, the limit on participants. Traditional casinos have a limit on the number of people. For example, bridge or mahjong, only four people can play, right? That's a traditional casino game. You can't have just any number of people playing together. Traditional gambling tables are mainly for 2 to 4 people. So in this process, it's limited by the number of people. You can't play big. That's the first limitation. The second limitation is, well, it easily triggers resentment. Why? Because, well, when we play mahjong, if you win and 3 people lose, those 3 will hate you. And if 3 people win and 1 person loses, that person who lost won't come back next time. Next time, they'll want to jump off a building, and before they do, they'll curse you all while wearing red underwear. They'll curse you because they hate you. They know who took their money, who took it away. That's the second limitation. What's the third limitation? It's that the rich and the poor can't play together. It's limited by economic status or ability or financial strength. For example, me and the viewers, like a delivery guy among my channel's audience, we have no way to gamble together because I'm much wealthier than him. I think for a normal gold bottom fishing move, I personally feel you need at least $50,000 to play. Just a snap of the fingers and 50,000 is gone. What's the point of playing with less than 50,000? But he can't do that. He thinks, damn, $50,000? Is 50 yen okay? Then it's impossible to play. 50 yuan, how can I play with you? It's the same with mahjong. For example, I can't play with my grandmother because she plays for 50 cents, 10 cents, or 50 cents. How can you play that? You play all night for 10 or 20 yuan. It's boring. So that's the fourth limitation. It's the limitation of skill level. These traditional games have serious, harsh requirements for card skills. The skill levels are different, so you can't play. Their hands and minds are so fast that playing against them is just like being slaughtered. This is why traditional casinos can't evolve. Then came the Wall Street era in America, the Buttonwood Agreement era, and the Dutch tulip mania of 1783. It evolved. The biggest sign of this evolution was the emergence of the house. The house appeared. The house appeared. This is something traditional gambling doesn't have. There's no house in traditional gambling. For example, in mahjong, the east position isn't the house. So what is the house? The house is the one that sets up a betting event's title and rules and fulfills an obligation to organize the gambling and handle the settlements. That is the house. In English, it's called the house. With a house, everyone is playing against it. This is the start of the financial market. The game has begun, and the house has a basic duty. Hey, La Wang, this sounds like Italian football betting. You're right, Italian football betting is a classic example of a new financial market. First, you aren't limited by the number of people. Today, AC Milan plays Inter Milan, or whatever the match is today. As long as people are interested or disagree on the outcome, anyone can participate. Whether it's 100,000 or a million people, it doesn't matter. The house sets the odds and people go for it. You bet on who you think will win. No limits on participants. Second, there's no wealth-based scale limit. That's gone. You say, damn it, I'm a billionaire. Well, then you just buy more. If you're just a worker, you buy less. Third, what other limits? There are no limits on people, scale, or skill. Skill limits don't exist. And second, there's no chance for revenge. No need for it. You accept your losses. Why seek revenge? You don't even know who won your money. You only know you lost. You place your bet, and when it's over, damn, it's gone. I bet wrong. You won't hate a specific person for taking your money. So, this is the evolution into a capital market. It evolved closer to finance. So, sports betting, Mark 6, Pak Pew, and welfare lotteries, they all have a house. So, now that I've said this, you need to take it a step further to commodity exchanges and stock exchanges. Bitcoin exchanges have a house just the same. There are always market makers. Take gold, for example. The market makers are the five major ones. Internationally, there are five big market makers, and they're actually all in it together. No Chinese involved, none at all. Before the Henan producers emerged, diamonds also had big market makers, about 20 of them. International diamond prices come from them. They set the quotes. You have no say, no choice but to follow or not. Whether you play or not, the international gold market has five big makers. So, do you think the silver market has them too? Are there market makers? Of course there are. The international silver market has them too. That's why when gold rises, silver follows. Everyone's speculating and buying. But why does silver crash so hard as if it's trying to wipe you out? Because the silver market makers can't hold on anymore. In gold trading, the demand for physical delivery is almost zero. In international markets, except for the Shanghai Gold Exchange, other exchanges have basically no demand for physical gold. It's all just a paper game, so there's little pressure. But the international silver market is different. As for silver, it's used in China and the US as an industrial raw material. Silver is a key industrial product. Beyond its financial role, it's actually a commodity. If you speculate like this and buy so many long positions, then the Chicago Mercantile Group, which is the New York Mercantile Exchange, COMEX, they simply cannot fulfill the physical delivery for you. In other words, you've pushed the market makers to the point where they'll start playing dirty. To put it another way, if I'm the bookie and I say AC Milan will win and I set the odds, but then everyone bets on them to win, I'd lose everything, right? If everyone's right, AC Milan must lose. Tonight, if AC Milan actually wins and all the gamblers in Italy and the world all bet correctly, I'd lose the shirt off my back. You see, it's a very simple principle. You might ask, how can they predict so accurately? Well, they don't need to. The house just follows the law of large numbers. 80% of people's choices will fall within a 20% range. That's the principle, also known as the Gaussian bell curve. Casinos only need to cover that middle 20% range. They don't need to worry about anything outside that 80% because everyone will choose that concentrated area. They just need to cast a net and catch that 80% of people, and that's it. They won't lose. But what do they fear? They fear outliers. The bell curve holds up as long as nothing extraordinary happens. If a special situation arises, the whole curve collapses. Now that everyone is following suit to buy silver, a special situation has arisen. It's like, uh, why the hell is everyone not following the dealer's playbook anymore? So these long positions everyone's buying, especially those led by the Asian markets. The demand for physical silver delivery has already exceeded COMEX's spot inventory. This has happened before in history. It happened in 1981 and in January 1980. Why? Because back then there was no China, no Chinese investors. It was the Hunt brothers. The Hunt brothers were the richest in America then. It was just like today. I'm buying silver and I'll bury you with it. Eventually, they forced the Fed to step in because they were so wealthy, the richest in Texas. They forced the Federal Reserve, specifically Fed Chairman Volcker, to announce interest rate hikes. The US dollar entered a rate hike cycle just like today. It's the same as the Fed chairman announcing quantitative tightening now. Rate hikes and tightening have the same effect. And back then, he announced long-term tightening. In 1980, it was long-term rate hikes. It was a direct hit. If they hadn't hit back, COMEX would have gone under. COMEX would have been finished. The financing banks behind the COMEX market makers would have collapsed. How many financing banks are involved with US silver market makers? They're all tied up in this. Of those big commercial banks you see on American streets, at least two wouldn't survive, so they'll keep hitting you until you're finished, hitting you until you question your life, just so they can squeeze the shorts, that is, deleverage. They have to crush all the short leverage to keep their exchange running. Otherwise, their casino collapses. It's a total crash, and they'd have to pack up and run. This is why silver eventually rises but drops first and drops so hard. This is the real macro view. From a macro perspective, this is the reason. There might be some variations in the details, like the sequence or the players involved. Those might change, but on the whole, that's the reason. Don't listen to any other nonsense like, oh, whatever. Like the silver bull market is over or the gold bull market is dead. What a load of crap. Seriously, how can people say such stupid things? Look, once they've cleared everything out, it rises again. It bounces back. Of course, gold usually leads the way and then silver follows. The passion for silver, the investment passion Asian investors have for gold and silver, it surges at the drop of a hat. Why? Because the US dollar weakens at the drop of a hat. It's all relative. This is also a new problem for comics. Well, comics has faced this before, but the cycle for this problem is so slow that people think it's something new. What's the problem? It's that America's national strength faces a powerful challenge every few decades. The last time there was a massive bull market in silver and gold and a weak dollar, it was because of the Soviet Union, the former USSR. It posed a powerful challenge to the United States. In the 1970s and 1980s, at the peak of the Cold War, the Soviet Union's national power was booming. The military strength of the Soviet led Warsaw Pact, its conventional military forces, had actually surpassed that of the United States. And in terms of nuclear weapons, both in yield and numbers, it also exceeded the United States. So the United States was defeated in the Vietnam War at that time, leaving it humiliated. The American president couldn't handle it and was even forced out. So after the 70s, the US dollar was actually in a very weak state. Of course, after President Reagan, the Strategic Defense Initiative eventually brought down the Soviet Union, but that was 10 years later. So every time the United States faces a world class challenge when the global order it created is challenged, the dollar softens and gold hardens. Of course, gold always hardens first, and then once gold is strong, silver thinks, I can do it too. And it rises as well, only to have its legs broken, metaphorically speaking. Well, Gold's legs were broken last time too. Its legs were broken for 20 years from the 80s all the way until 2004. When we grew up, we realized it. We were in Beijing back then. Mentioning the China Gold White Paper, it was written that China's gold, basically, gold was about to enter a century long bull market, according to that white paper. It was done in 2004, and it was very impressive. Why? Because we saw the rise of China. If the East rises and the West declines and China continues to rise, it will eventually become a real challenge to the United States. If everything is made in China, then eventually Chinese people, wealthy Chinese people, will realize that investing in real gold and silver is more reliable than investing in US debt. The United States is actually a rogue. Actually, the US is a rogue because it uses things like Hollywood's glitz and glamour to arm its own legitimacy. But in reality, it has many, many, many dirty things, especially when you challenge the US led international order. You can't exactly call the US a rogue, but its behavior is exactly like a monkey king in a monkey mountain or a male lion in a pride. When a young lion comes along to challenge, or a young male monkey grows up and wants to challenge, the old Monkey King definitely doesn't lead by virtue. The US doesn't lead by virtue. Usually the US claims to lead by virtue, saying, guys, come sit down, let's talk. But at times like this, it never leads by virtue. Now, the US has undoubtedly reached that point again, and today's America seems even more divided.